Hi, I'm Pierre Kovacs, and welcome to Capital Conversations, a monthly deep dive that takes a 360 view of digital transformations in capital markets. With an unpredictable market, history has proven that business resilience is dependent on continued investment in technology. And together with our guests across corporate and investment banking, wealth management, asset management, and market infrastructure, we'll discuss how capital markets are innovating to weather the current market climate. And today, we'll take a look at corporate and investment banks with Jason Imperato. Hi, Jason. How are you?
Hi, Pierre. I'm doing well, and thank you for having me here today.
Can you tell us a bit more about yourself and your background?
Sure. Well, I've spent pretty much my entire career working as a technologist in financial services. The majority of my experience has been on the sell side, but I also spent a couple of years as a CTO for a multi-strategy hedge fund. Most recently, I spent 13 years at a global investment bank where I served as the regional CIO and the global CIO for their capital markets business.
So, Jason, you're a seasoned CIO, and you also have this technology background, having held several positions as a CTO. With your background, you have witnessed a number of data programs at scale within large organizations. Could you shed light on the key differentiators between the most successful data programs and those that fell short of their potential?
Sure. I think for me, there's two main factors for success. I think, as for any initiative, really, you need to have the proper sponsorship. But I think beyond that, it's really important that you set out at the beginning to solve a specific business problem.
Mm-hmm.
And I guess maybe to say a bit more about that, I think, one of the pitfalls of trying to generally solve a big data problem for an organization is that you run the risk of being a bit disconnected from the rest of the organization and maybe, a bit as viewed as an ivory tower type initiative.
Yeah, I'm glad that you brought that up, actually, because I remember a couple of years ago, the type of request that we had from clients was basically, could you help me build a data warehouse or a data lake? And so that was very, very focused on the technology platform and the tools. And this project usually struggled to demonstrate any value or even calculate some kind of return on investments, obviously. And then we've seen that evolved a bit more with some requests that are more have a more holistic approach, which is more, I need a data strategy. And there, obviously, that's to your point. That means you take into account the business sponsorship, the governance, the organization, and the roles and responsibility around this program, the ongoing support and maintenance. So it's much better view of or you have better chances to get to a valuable program. And I think now the latest incarnation of that is even going a bit further than that, with some requests that are phrased as I want to establish a data culture in my company, which put really the emphasis even more on the transformative power of this program, in the sense that they're going probably to affect your operating model. They're going to, or even the business model to some extent of the company by being more data driven. So when you say business sponsorship, maybe we can elaborate a bit on that. Is there who is the good sponsor for this kind of program? Is it a CIO like yourself? Is it going to be the CTO, the CDAO, the CISO, the business users? Where do you see a good sponsorship for these programs?
I think actually the sponsorship really needs to come from the business and from and from executive management, if you really want these types of initiatives to succeed.
Mm-hmm. So the business. So when we say the business, it's going to be in the end the users. I mean, or the representative of the users that are going to get any value from these systems. All right. Your one of the common scenarios of these for coming up with this program is, for example, the aftermath of a merger, and it could be from an acquisition of a different maybe a branch or company, but it could also be sometimes simply across different business lines that were historically siloed, and there's a need for consolidation because you end up with these duplicate systems and data sources. From your experience, what strategies have proven to be effective and successful in harmonizing these data landscapes?
Yeah, I think one of the biggest challenges with these types of initiatives is they are often done under significant time constraints. And an example, I was working for Lehman Brothers in 2008 when Lehman went down, and I joined Nomura as part of their purchase of the Asian and European franchises. So basically, Nomura had taken on this significant cost base with no revenue associated with it. So there was a race for us to get the Lehman businesses back up and running on the Nomura platform. So in that context, there was a couple of things which were really important in terms of moving forward there. You needed a mechanism in place to make quick, informed decisions about which platforms you were going to choose ultimately as the prevailing platform. But you had to do all of that while acknowledging that you were going to have to make some trade-offs, for speed to market.
Mm-hmm.
But that's where the second piece of this, I think, comes in. I think that's great, but the organization needs to have the will to address those trade-offs once the initial go live has happened. So you've got to think of that project as not, getting from A to B, where B is up and live on, the integration, but it's got to be to C, where you've not only live, but you've now rationalized the platforms, and you've addressed some of the trade-offs that you may have made in phase one.
So that's, yeah, and you're right. I mean, that's something that you really need to get the buy-in from the beginning of the project, because very very often the team gets sucked into another project, or even just in doing the support for what they put in production, and suddenly the project is a bit starving from not having the right person to go through the rest of the backlog, or the what have been identified as maybe technical debt.
Yeah.
There are some. There are some business models where these kind of integrations are almost business as usual, and maybe that's more true in the buy side, or asset managers or fund administrator, where I've seen IT teams that they know that every year they will have to integrate maybe 4 or 5 different systems, and that is just part of their BAU. And how do you? Do you have any way to prepare for these ongoing integrations, and at the same time, I guess you want to keep a nimble core systems?
Yeah, I think if you are, I guess, a serial acquirer, I think the best way to be prepared for those acquisitions is that, you need to have a pretty strong platform going in, right? Because if you're going to continually extend that platform, that fundamental infrastructure has got to be strong. So I think that's probably the most important thing that you can do in terms of being prepared.
The data quality seems to remain a persistent challenge in many organizations. Could you highlight some instances where you've witnessed some successful strategies to address the data quality, and how can the financial institutions ensure that their data are usable and used?
Sure. I think I guess I'd highlight two things in terms of making sure that your data remains of high quality. I think it's important that you have explicit data ownership assigned for data, and that your data owners and custodians understand what their roles and responsibilities are with respect to that data.
Mm-hmm.
And the second piece is, I think it's really important that you have feedback loops in place to correct faulty data in a timely manner. And I really want to focus on the timely manner piece because you can imagine if you can't get data corrected in a timely manner, well, then that incentivizes other parts of the organization to try to solve that problem. And then you get duplicate data all over the place. An example from an organization I worked at, we had an enterprise data team that was responsible for maintaining all of our reference data and instrument data for the organization. And they worked with the operations technology team who had built a platform to consume instrument data and distribute it to the rest of the organization. And they had an SLA in place for fixing faulty data, but that SLA was about 30 minutes. Now, that worked for a lot of the organization, but it didn't work for the trading desk. As you can imagine, 30 minutes is an eternity. So what happened was the front office ended up building an instrument caching mechanism to allow the front office, the trading desk, to make corrections intraday on an as-needed basis. Now, of course, all of those corrections were meant to be fed back into the enterprise platform, but that didn't always happen in a timely manner, and you had the kind of predictable results. Now, to address that, what we ended up doing was taking all three of those teams and putting it under common leadership and charging that individual with, putting in place an SLA that works for the entire organization, rationalizing the platforms and addressing the data quality issues.
Mm-hmm. Yeah, that's really a really good point, and it's because there's really a cost. Initially, it might have seemed that like a very good idea to have this cache for the front office, and because you would have, but then suddenly you realize the cost of reconciliating this data and maintaining this data, and you have different teams that you also need to coordinate. So it's a bit Conway's law, right? If you have two teams, you're going to have a process with two phases.
Yes.
So, and the data ownership, I think you're right. It seems like the maybe the easy one, but it's in some instances it's really difficult to find where the data ownership lays, because sometimes you have maybe different systems, and especially when it's third-party systems and they're both mastering some of these data. You were talking about instrument data. If you have two third-party systems that are doing the mastering of this data for some of these, and maybe with some overlap, it becomes very difficult to say where is the data ownership. And on top of that, I would also go further. You also want to map the consumers. You want to know who is producing the data and who is consuming them, and the responsibilities. Fantastic. Yeah, and I think you're right. The feedback loop and the fact that sometimes quality is not the problem. Sometimes data is not used. Sometimes the data is there. It's available. It's discoverable. It's in the right format. But if it's not, as you say, if you don't have the proper SLA, or people will stop looking at this data, and that's where sometimes it's not so easy to get the insights on why these people are not using this data. If you monitor the data usage, which is one way to check whether your data are useful, and try to understand why some pockets of data are not really used, and sometimes it's surprising the reasons, and the reasons can be simply because they're not maintained in a timely manner, or they're not the quality that the users expect. Moving on to the realm of artificial intelligence, investment banks often find themselves at a crossroad, I think, because they're on one side they recognize the transformative power and the potential competitive advantage that they can get from this AI project, but at the same time they also grapple with the complexity of these ventures. The complexity being I find some time to actually assess the feasibility of the project. And we might have an idea that we think AI can solve, and it's not always easy to assess the actual feasibility of the project. And the other aspect is that sometimes it's difficult to predict how long it's going to take to actually converge to an acceptable rate of success. So it's nightmare for a project manager, obviously. Any experience in this field that you could share?
Yeah, so I mean, I think you're spot on with I think what you said, in that it's very difficult upfront to evaluate these initiatives in a kind of traditional ROI framework, because it's hard to time box them, and it's very difficult you don't know at the outset where you're going to end up, because it's kind of thesis based, and then it's an iterative process to get from kind of A to B, if you will. I had witnessed one initiative where the goal was to build a predictive market making capability for the government bond desk, and it's kind of started out with kind of the ambitious goal of really taking over most of the functions really of the trading desk ultimately. And this went through several iterations, and ultimately it really did not perform very well in market dislocations. And in some ways, it's not really that surprising, right? When you think about it, you get these one-off events like Brexit. Well, there is no data to train a model on to prepare it for Brexit. But ultimately, I mean, after a number of iterations, what ended up happening was, the model actually got to the point where it was pretty good at handling your small delta, smaller transactions. And it actually fit in pretty well with the business, because at the end of the day, that model could handle that volume, which was volume, by the way, which we weren't participating in previously. So we picked up market share, and it also freed up the rest of the trading desk to focus on the higher margin transaction.
Okay, so that's great. So really, I guess the advice here is that you need to be prepared to pivot and to adapt this to your model. So the outcome might not be what you expect, but it can still be valuable if you're able to pivot and to iterate on that.
Absolutely.
Well, Jason, thank you very much. Thanks for joining us and sharing your experience and insights on data programs and AI in the world of corporate and investment banks. And to our listeners, thank you for tuning in to another episode of Capital Conversations. Stay tuned for more conversations at the crossroad of capital markets and technology. Until next time.
Thanks, Pierre.